Whether I like it or not, ticker symbol VZ or Verizon Communications is one of my largest single stock holdings across my entire 7-figure dividend growth portfolio. Now, to be completely transparent, I currently own around 1,262 shares of Verizon at an average cost around $53.49 per share, and keep in mind Verizon is trading at around $41 per share as of right now. Now, in this video, we're going to dig a little bit deeper into Verizon, and I'm going to share with you exactly my thoughts moving forward with ticker symbol VZ, and we're going to see exactly if this stock could potentially be a buying opportunity because it is offering a pretty massive dividend yield as of right now, while it's still trading well below the all-time highs. On top of that, I'm going to share with you exactly what I plan to do with this 1,200 plus shares of Verizon long-term in my portfolio. And keep in mind, it might surprise some of you guys. It might not be exactly what you think. So if you've ever been particularly interested in Verizon as a dividend stock to hold on to, or you currently hold it as of right now in your portfolio, make sure to stick around, drop a like down below, and let's get right into this one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, like I said in the intro, I do have around 1,200, 1,300 shares of Verizon across my various portfolios, and unfortunately, I bought Verizon a long time ago when it was a lot more expensive and when the yield was a lot lower. I bought Verizon in my early days looking for what I thought was a high quality dividend growth style single stock that was sort of the best in its class in telecommunication. Now, obviously, if I could go back in time, like a lot of us would do with different positions in our portfolios, I would have positioned Verizon as a much smaller position for one, and obviously bought it at much cheaper than I did previously. But all in all, even though I'm down as far as paper loss goes, on actual share price, I've earned massive dividends every single quarter from Verizon, which have also gotten larger over time. And on top of that, I have been selling covered calls basically the entire way down, so I haven't lost as much as I could have. But regardless, that does not change the fact that I personally, at some point way back in these days, decided to buy into a telecommunication company that seemed to be on the up and up and seemed to be somewhat stable, low beta, even though in the max time frame, Verizon has been basically declining ever since before 2000. Verizon's down around 21% as far as the max time frame goes. The 10-year chart looks horrible as well, down 16.75%. And I get it, with dividends, the total return is much better than this, but still the price return for Verizon over basically every time frame has been pretty horrendous. But with Verizon currently offering a 6.5% forward dividend yield and the potential to recover from here. On top of that, Verizon has had some slow and steady dividend growth historically. This single stock could be offering an opportunity for investors that not only want to lock in a 6.5% yield, but also potentially profit off the upside of the stock price as well. Now, I came across this article from Simply Safe Dividends. It says Verizon's dividend remains solid as subscriber base holds steady and deleveraging continues. Now, the dividend at this point is basically all Verizon is offering me, because of course I'm down on the price return, but with the 1,200 or so shares, I am currently earning well north of $600 on a quarterly basis. But to read a bit of this article, it says Verizon, the nation's largest wireless carrier, continues to plod along as major telecoms battle with promotional phone deals to attract customers as American mobile market nears saturation. And with far more service parity, mobile carriers are competing on the price more than ever before, presenting Verizon, which boasts the nation's best network for years, a more challenging pathway to getting customers. And for a lot of time, Verizon was sort of the best carrier as far as coverage goes, but these days, pretty much all the phone brands, even the cheap ones, have pretty decent coverage, which I think we all know. Now, a while back, Verizon reported a net loss of 158,000 wireless postpaid subscribers or recurring monthly contracts, which was better than the analysts expected and marked a substantial improvement over the 263,000 net subscribers lost in the first quarter of last year. In fact, interesting enough, this was Verizon's best first quarter net subscriber number since 2018. This article goes on to then talk about subscribers and what the numbers really look like and how it's not necessarily as bad as it looks. And back in April, we did hear this from the CEO, which is very important, especially to shareholders that are currently holding on to Verizon. They said our dividend is healthy and secure, and our free cash flow dividend payout ratio continues to improve. We are focused on putting our board in a position to continue to raise the dividend each year. Now, although this sounds very promising, we have heard this from different CEOs where they say things like this, but still, the dividend needs to be cut sometimes to not only allow the company to potentially survive, but also to clean things up on the balance sheet. And although Verizon does have a very slow dividend growth of around 2 or so % over the last 5 years, the dividend has been going strong for 40 years without a reduction, and on top of that, 17 years straight of consecutive increases. So for investors looking to dabble in the 6.5% starting forward yield as of right now, I think one of the main most important concerns to be, which I honestly cannot tell you what's going to happen in the future with Verizon. This one stumps me. Will Verizon 12 months from now be trading at $36 per share or back towards the highs at $52 per share? Analysts are sort of mixed. But overall, the consensus is still a buy, with 15 analysts with a 12-month price target forecasting Verizon's average price of around $43.80 per share. With a low of 36 and a high of 52, the average predicts an increase of around 7% as far as price return goes, which is not all that extremely bullish, but historically Verizon has been pretty low beta and the stock price hasn't moved around all that crazy, at least in short time frames. So all in all, over the past 5 or so years that I personally have been stacking shares of ticker symbol VZ, although the performance has been pretty horrible, if you take into consideration all the cover calls I've sold and of course the massive dividends I've been getting paid every single quarter since I started buying shares a while back, my actual total return is not as bad as some other positions across my portfolio, and of course comparing to some other stocks and ETFs that have had a rough patch over the last few years. But all in all, my personal plan with Verizon as of right now, and of course these things can change, I'll always keep you updated, but as of right now, I am not purchasing any more shares of Verizon, even though I could of course dollar cost average down. And even with this sort of bullish outlook, I personally am more than content with my 1,262 shares of Verizon across my portfolios. And on top of that, I'm currently selling at the money or even in the money cover calls, basically getting paid to hopefully get rid of my shares of Verizon one by one and reinvest the money into something higher quality. But all in all, Verizon has been a good lesson to me to not put all your eggs in one basket. And luckily, I did not invest more in Verizon, but with how many thousands I already put into this single stock, it's a good lesson to be overly diversified, especially for industries like telecommunications, which in my opinion has been sort of on the downtrend for a while now. But because there is some interest in Verizon stock at these current levels, and because there could potentially be some upside, I would say I'm personally borderline neutral on whether Verizon is a buy or a sell at the current prices. But now lastly, most importantly, I want to hear from you guys down below when it comes to Verizon, and if or if not, the 16.11% 1-year time frame price return is enticing you personally to grab any shares of Verizon, or if you along with me are either holding onto your shares or watching this thing play out. Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.